Hello everybody and welcome to Green Star Trading with me, Tom. All views, opinions and ideas expressed in this video are my own and do not constitute financial or trading advice in any way. Right, for the next few minutes we're going to be looking at the Russell 2000 ETF, which is the IWM, and we're going to be taking a look at the longer term picture, what the recent breakout might mean, and set some targets for where we might end up. So, first things first, we broke out, finally. It's taken a long time. We've been talking about the possibility of this being a building of a base for a move higher, or the potential topping pattern. Well, it turned out to be a base to move higher, and that's essentially what we've done. We've broken out these previous highs. We were in correction essentially from the 15th of March all the way through until just the 3rd of November was when we broke out, I should say, of the range that we've been in all this time. So. Starting with the Elliott wave count first, I've got this as a WXY34 concluded at primary degree, and we came roughly to, they were the bear targets that never materialised, we came to the 23.6 and just hit it here, hit it here, hit it here, almost hit it again, and we just went sideways. We gave back 23.6% of the prime move up, which is a wave 4 target. I was expecting potentially moving lower to the 38.2, but the longer we stayed within this range, the less and less likely that became, until it didn't happen at all. Since then, we've now pushed higher, and it does appear to be an impulsive move, and so far I've broken it down as an extension, going higher into an extended wave 3 within a primary wave 5. So I'm not sure if that's correct. It's a little tricky at the moment. I guess you could say this was a leading diagonal perhaps into a 1, and then you could say A, B, C into a 2 for a running flat, and count the 1, 2 at minor degree here. Then you could say 1, 2, and then maybe 1, 2, 3, 4, 5, and take it down 1 wave degree. It's probably the best alternative I could think of, but I've just decided to say 1, 2, 1, 2, 1, 2, 1, 2, 3, 4, 5, and then this will be 3 at minuet degree, 4 at minuet degree, and then 3 at minute degree, 4 at minute degree, and then 3, 4 at minor degree, 3, so on and so forth, as we've all got laid out up here. Now, it might not prove to be an extension like that. That's possible. And the thing is, having gone out of the range now and gone above the previous wave 3 high, technically a wave 5 could finish at any moment. We could just put in a simple 5-wave structure here, and that could be the end of it. So it's possible also that maybe we're looking at the idea of a 1, 2 to here with that expanding pattern, a 3, 4, 5 done. Possibly as well. Things will fill out as price data continues. It's likely that we'll get some kind of retest of all this range here. We are coming down at the moment. Maybe we're putting in a wave 4 at a sub-minute degree here before we continue higher. I wouldn't be surprised if we do come back and test this breakout. That would be very normal. We don't have to do it. It would just be very normal to see it happen. So up here I've got a target set at 272.67. This is a target based in a linear measurement instead of log scale, taking the wave 1 and projecting it from the wave 4 to find the wave 5. So from the wave 4 to the wave 5, if we just measure what that would be for a moment. Yeah, so from where we actually bottom, that's another 30% move higher in the index, which is bloody significant, isn't it, really? So a significant move which is likely already well underway. So that's one target. Another target we can look at, which I haven't projected but we'll do while I'm here before we go and look at the longer term picture, is if we just take the wave 1 and 3 and project it from the 4. Now, because this is a very shallow 4, we are going to have a higher wave 5 target at our golden ratio here at 61.8%. So let's just lock that in place as well. Now I am working on an alternate count as well, which is extremely bullish, much more bullish than this count, which assumes that rather than having topped in a wave, rather than having completed wave 3 and 4 at primary degree with this shallow retracement, the possibility that we actually had a very rare, incredibly shallow wave 2. Now, given the retracement, I'm not sold on that at all at the moment. But it is a possibility, and I'll talk about why in a moment. It's a matter of market geometry looking a bit skewed, which has given me the potential of, considering that. So let me show you what I mean now. I've switched off all the count back here. We're going to switch that on in a little while and have a look at the longer term move from the 2009 March lows, because if this is the wave 5 of a 5 that we're now in, it could still have a significant way to go, and it could take a significant time to get there, but this could be the final move up in the bull market. It may take months, it may even take a year or so yet, I don't know, but either way, given how long this correction has taken, we could be up here in a flash, we could be up here in months, I don't know, but either way, this could be the fifth and final move. So talking about that alternate before we go back and look at the history of the market here, going back over the period of this bull market, what I mean is, if we take our proposed 1, 2 here, pivot at primary degree, we were assuming, here's our 3, but here's our 4, all the way outside of the pitchfork completely. Now, you can have this happen with a long meandering 4, where you push your way back into the pitchfork later to get that high, but normally, and it's very common to see the same wave degree, so if it's intermediate, primary, minor, whatever, it's quite common to see the same wave degree held within the same pitchfork, so an impulse wave more like that. So that's what gives this the possibility of being a very rare 1, 2 sideways shallow correction for a 2, but it is possible. Now if that's the case, then obviously these targets are way too low and things just going to go absolutely parabolic. Okay, I had to just pause the video there for a moment because I had a knock at the door to attend to, so let me just try and get my head back where I was. I was referring to this idea of a 1, 2 and the wave 3 going much higher. That's what it was, wasn't it? So yes, that is a possibility. I'm working on an alternate count to explain that, but for the meantime I think we'll stick with the idea that this is completed 3-4 going up into a 5. So now let's just add these targets here. We'll say primary. Forgive me, I'm breathing a little heavily as I had to run up the flight of stairs after pausing the video. Primary wave 5 targets. Okay, there we go. Right, so let's now zoom out and have a look at the bigger picture. So we're going to come out to the weekly time frame to do this, and we're going to get the screen so we can see back to 2009 low, 2008, 2009. Let's just get this up. Okay, actually I've got this going back through to the end of the tech bubble actually. So let's just have a quick look at the long-term idea for a moment. So what I'm saying we have here is 5 cycle waves over 20 odd years. Well, almost. We're going to September 02. So if we made it out into September 02 next year, this would be 20 years of a 5-wave cycle into a greater wave 1. Essentially, let's just shift that all the way up here. We don't know if it's going to get there, but this does look like it could be a parabolic move up. So one of the things I want to look at here is the pitchfork I'm dealing with here to explain this. Now what we have to do to make this fit, we're dealing with a price skew that is taking the price from 31 bucks all the way up to currently 244. That is a very significant gain over this whole period, obviously. Let's just have a rough idea of what it actually represents. It's 654%. So pretty big move. So what we're going to do is we're going to shift the chart into log and then have a look at this pitchfork. Now, the second we do that, we can see how neatly this is contained price. What I'll do for the moment is I'll just take the count off, and let's which one's this one? Okay, so that needs to go into the bullish count. Let's just hide that out of the way. And let's get rid of these targets for a moment, and let's get rid of this range just to keep the chart really uncluttered. So as you can see, we had most of our wave 3 here channeled in between the 38.2. So the 38.2 on either side of the median line, we basically channeled all the way up into here. saying that this pivot here is a 1, 2, and this is the related pivot 3, 4 at the same degree. So if that's true, 1, 2, 3, 4, you know, we had a good 10-year, good decade-long wave 3. That seems long enough. You could shift all of this into, excuse me, just clicked on the wrong thing. You could shift all of this, if you wanted to, into primary degree, I guess, if you wanted to, and say that this is all leading up to a cycle wave 1. Considering that we were trading down from the end of 2000 to the low here in 2002, I guess that would be permissible. Let's say 20-year cycle wave or 19-year cycle wave, but I'm just calling it cycle 1, 2, 3, 4, and expecting a 5 up here within the next 12 months or sooner, who knows, to complete this long-term cycle. Now, this would be quite a short in time wave 5. It could go higher and it could continue longer. It doesn't have to be 12 months. You know, it could drag on for years, but I suspect that we're going to find roughly the same area that we, you know, if we take the initial pivot at the wave 1 here, we could be looking at a wave 5 back up here at the top of the pitchfork. It doesn't have to get that high, because if we think about the shorter term count we were just discussing, you know, we're saying 1, 2, 3, 4, and now a 5, right? So a 5 into a 5 into a 5, so to speak. So let's just delete all these. Bear with me one moment. So that's the overall idea. 1, 2, 3, 4, 5. Going to top out in a larger wave 1, which will either be super cycle 1 or cycle 1, depending on whether you're counting this as primary degree or cycle degree. After that, a pullback relative to the initial move off of the low back here. So, you know, if we were to do that now and give up 50%, the index would come back down to 89 from 244. That's pretty huge. This is in log, of course. If we were to come down in linear, we would halve it down to, you know, 138 spot 74. If we were to come down to the 61.8, we would come down to 113. So we wouldn't even, you know, break the March 2020 lows in that case. But if we were to come down to those log targets instead, let's say the market pivoted from this moment and we made a 50% sell-off. 50% would bring us down to 120 from what is currently 240, so obviously halving the price, you know. So we could come down lower, you could have a massive correction, 60, 70, 80% plus, in which case, yeah, you could hit those log targets down here at 80% sell-off. I mean, I don't know if that can happen or not, to be honest. I don't know if a 50% correction can happen. I mean, I don't think anybody can tell you that, to be honest. We've seen that kind of action before at larger wave degrees, obviously, like the crash of 29, and has been 90 years. So I don't know if that's relevant. But either way, let's bring up the count again and we'll hide this pitchfork. So that's the one thing I wanted to point out, how, you know, resistance here at the 38.2, resistance here at the 50, resistance here at the 38.2, resistance here at the 38.2, back to the median line, back test the test the outer bound of the channel, resistance here at the 50 and the 38.2 again, and resistance temporarily here at the 50 again. So I'm expecting it to push higher though. Given my short-term count and such a long period of consolidation, we should start to step up here over the coming months, is what I would expect to see. So continuing to push higher. If we break back down from here and take out the lows of this previous range, that would definitely, in my mind, signify a top. Okay, so it's a pretty small range if you think about it, really, given how long we've been here. If that were to happen, I'd have to be very bearish very quickly, because I just think that would be, having established such a strong area of support, if that didn't hold, that's bearish. So I think interpreting the count as 5 waves complete at that point would be the sensible thing to do. Obviously, we'd still be looking for an impulsive move down and a retracement back up before shorting it, and we'd still be using a tight stop and the STS as a way of getting into the trade as safely as possible. Right then, so hide the pitchfork, and let's bring up that count and the bullish count here. So it is a pure impulse. I get a 1, 2, 3, 4 and an ending diagonal in the 5th of the cycle wave 1. Nice simple A, B, C down into the 2. Haven't labelled it, it's obvious what it is. 1, 2 expanding flat here at primary degree. 3, 4 zigzag here at primary degree. Doesn't look longer than the 1, but remember we're in log scale. I assure you it most certainly is. and then we come up into a 3 zigzag ABC 4 here. So this is the only thing which leaves me a little curious as to what's going on. This could be a double zigzag, ABCW, ABC, this should be labelled 5 waves actually, sorry, I've done this as an ABC, so this could be zigzag, zigzag, in which case this would be WXY. In fact, I think I meant to label it like that, but it's been a while since I've, so let's do that now, I'll call this a double zigzag, and that would be at primary, wouldn't it? So there you go, got a double zigzag here, and we've got an expanding, a zigzag, normal zigzag back here. Still not the cleanest kind of alternation. We appear to have had a very different wave 4 in the other indices, in the SPY and in the Nasdaq and in the Dow, where we saw either a flat or an expanding triangle in some cases. So there you go, 4 cycle waves complete with no overlap, pure impulse. 3 is not the shortest because it was longer, shortest because it was longer than the 1. So there's no upper limit on 5. So while we're here, let's just take a measurement for wave 5 on log scale and see how it coincides with our recent measurements. So if we take the length of 1 here and we project it from the 4 low, let's just make sure that we're being accurate. So we'll get the magnet, slap it on there. Get the magnet, pull it here, and then we want the magnet and pull it all the way over here on the low. Okay, turn the magnet off, you twerp. Right, here we go. So let's now come in and have a look at where we are on the daytime frame in the shorter term. So we need a log measurement here, sorry. So this gives us a target of 253 for a 1-to-1 parity with the wave 5 at cycle degree as a log scale measurement. Okay, and let's have a look at how that turns out with our primary wave 5 targets. So on the primary wave degree we get higher targets at 272 and 295, but we'll put it up here anyway because it could be significant. And we'll just say cycle wave 5 target. Now it's not necessarily going to be significant, but it could be an area of resistance. Temporary resistance maybe, 1, 2, 3, 4, 5 into here, then a bigger correction, then a push higher. So let's pop a price on it. Lock that in place as well. And we'll say cycle wave 5 target 1 from 4. Okay, right, and this is primary, so I know that's the same colour as white. Yeah, so that's basically how I see things at the moment. If we were, like I said, to top out, now that we're above this 3, if we were to top out anywhere here at any time, and then break back into this range and break through it, I would consider that 3, 4, 5, wherever it comes complete. And then you would be looking for 5 waves down, 3 waves back, and that would be 1, and that would be 2 of an A before a huge collapse down in price. So you don't short it, and you don't try to, until you see something telling you that it's time to do it. I mean, until it reverses. I recently said that in my SPY video, that I see no reason to assume a top is anytime soon. If there is, it will probably be a temporary top before pushing higher, and I would argue that the IWM here supports that idea. That supports the idea that we've consolidated for a considerable amount of time, and we are going to get a considerable move as a result of that. Could be wrong, but these are the targets we're going to look for in the future as price action unfolds higher. So that's our Elliott wave analysis. So let's switch off all this noise. Let's just put this price target in with the primary 5s, and I'll rename that later. I know what it is. It's written on the chart anyway. And let's get rid of all this Elliott wave noise. We just need to add that one into there. Switch this off. Bring up our indicators, hide this out of the way, bring up our moving averages, bring up our volume as well, have a look at what's going on. Okay, for some reason my volume profile has done a runner. I don't know if I accidentally turned it off. Let's bring that up as well. Okay then. So we have on the chart our exponential moving averages, 10 in yellow, 20 in blue, 60 in orange, 250 in green. Let's just come to the weekly time frame first. Okay, price is now above the 10, above the 20, above the 60 and above the 250, having broken above this big range here. We can see this is, depending on where you look at the chart, if we go to everything from the March low, you can see how this area here that we've been ranging in, this is the most significant area in the volume profile. Okay, more so than the base of the 1-2 down here that we launched up into this 3-4 up here with this huge gulf in between. So we could have fallen through that, as I pointed out in the potential bearish count a while ago, which is no longer valid. And when we do top out in a 5, wherever it is, we will after we break through what would now be support, we would collapse through this quickly. So it will be significant, it just wasn't significant now. Alright, the next thing to look at if we come out further is this huge cycle wave correction. This becomes our next point of control. So whenever the market does top out, all of this here, this prior wave 4, is going to be support. And there's peak after peak after peak, trough after trough after trough. And depending on the severity of the correction, at cycle wave degree or super cycle wave degree when it comes eventually, it could be 30%, 50%, 70%, who knows. Okay, but likely to find some support in this range. 250 moving average is a long way away still. On the weekly time frame, we can see volume's been pretty even, really, pretty steady. There's been a little decline in volume and a little pop lately, and not much going on this week, but it is only Wednesday. So, you know, we'll see if we start to pick up volume now in the last wave, or if we get that typical wave 3 to wave 5 divergence. So if we were to get, if we look at the RSI here, this is the peak of our wave 3. As we can see, the peak of our wave 3 in the MACD here, going back donkey's years, this is the biggest reading we've got. So if we were to now get any kind of divergent high, even if it's marginally below, same here in the MACD as well, then you could say, you know, 3, 4, 5 divergent high in the RSI and in the MACD here. Expect to see the same, maybe much higher pricing in in price terms, much higher, but divergence in the RSI and the MACD not guaranteed, but would be quite typical. If we continue to see weak volume or volume not increasing in any impressive way, then that would be another sign also that this is a fifth wave move, as fifth waves can be achieved on lower momentum, lower volume, and often create divergences with the much more momentum based wave 3, so that's quite common. Let's come down to the daily time frame and see what we can see. Now, we have seen on the daily time frame this move out of the range supported by increasing volume. So, you know, not quite above the height of the volume in this range here. We've got higher readings here, but we have seen it increase as we've broken out. So like a test back and a continued push higher would be quite normal. I would expect that to happen. Overbought conditions in the shorter time frame here on the day time frame, also likely accommodating a pullback. And on the MACD, we've had a really nice clear shift into positive momentum with a series of higher lows and what will now be a higher high, moving from negative to positive above the zero bound, and also seeing an increase in activity on the histogram here supporting that shift in momentum. So we will likely see a pullback in the short term to cool off just a little bit, but I think we're just going to continue to push higher after that. Same here in the RSI. On the daily time frame, still above the 10, 20, 60 and 250 exponential moving averages, and point of control now below us, obviously having broken out of this range. So putting it simply, whether we revisit this range as we come down, we complete something bigger perhaps, and we come back into here to find support around all this previously traded volume, then push higher, or whether we just do a flat out retest of the range here before continuing higher, both would be perfectly normal. What would not be normal would be to break these prior lows. So if we've gone 3 and 4, and this should be a 5, anything which brings us back below where the start of the 5 began, that would be the completion of a larger wave degree up here, 5 waves complete into a 1, and then this would be the beginning of an A, B, C, much lower. So that's the only real bearish situation now that we have to be on guard for, which is taking out these lows. If that were to happen, that would be extremely bearish, and I would expect a huge breakdown under those circumstances. But I don't think we've spent all this time consolidating just to do that. Okay, I think we spent all this time consolidating to make a real effort to go higher. Could be wrong, but that's what I would be expecting to see. And it supports my analysis of the broader indices as well, where I also expect further bullish activity over the coming year. Okay, that's it, guys. Thank you for joining me on this technical analysis of the Russell 2000. I hope you've enjoyed it. If you're new to the channel and you've liked what you've seen, please subscribe, smash the like, hit the little bell notification icon to remain informed of future video releases. If you feel like leaving us a comment in the comment section below, feel free. And as always, thank you very much to my Patreons. Your support is greatly appreciated. If you're interested in joining the Patreon, there's a link in the description below. Head over, have a read of the different tiers of what's available, and if you're interested, feel free to sign up. It's still relatively early in the month, so you're still getting some pretty good value. But if it gets towards the end of the month, I always suggest that people wait until the start of the next month to sign up again. Okay, so yeah, and if you're not following me on Twitter, there's a link to my Twitter feed as well. Alright guys, take care, and I will try and get back to you again tomorrow, trying to get a video out every day this week. Alright guys, take care. Bye.